Lehman may have also gotten a little extra push off that cliff from JP Morgan and Citigroup, as well as other banks. As the value of Lehman's assets fell, the banks demanded more collateral from Lehman in lending agreements. That made Lehman's financial position even worse, or even weaker than that. The court-appointed examiner spent more than a year, $38 million, investigating this report.
Come up with 2,200 pages. Let's talk about it with Adam Connors, Instant Audit this morning, Director of Corporate Finance at CK Coopers, with us from Irvine, California. So I guess that sets the stage, Adam, for the lawsuits. Is that right, going out from here, whether it's Dick Fuld or other top executives, CFOs, former CFOs at Lehman Brothers in civil court?
Yeah, you're absolutely right. I mean, this gives them the chance to basically unfold and unmask the conversations. I mean, in this report, they actually have dialogue and emails of some of the top executives outline their kind of thought process, as well as how they're using this Repo 105 rule, which you'll hear a lot about, I'm sure, today and the next couple of days. And basically how it's kind of, and it's been quoted as window dressing the financials. Now, the thing to be concerned about...
Well, that makes you not, to explain it, it makes you look not as leveraged as you really are, right? In other words, it looks like you're not borrowing money to fund your profits and your expansion, when in fact, really what you're doing is exactly that, expanding on borrowed money.
Yep, you're absolutely right, Connell. I mean, that Guinness trip didn't take you too far back. So, you know, quite frankly, I mean, it's a situation where Repo 105, it's going to be looked at. My guess is there going to be some regulation that comes along with the way that you can use Repo 105 moving forward. It's not a practice that hasn't been not used, and unfortunately, and what's going to come out in the courts is that the way that it was used out of manipulation, or at least that's what the report points to at this point.
Well, let's talk also about the blame game a little bit. We're hearing JP Morgan, also Citigroup, demanding more collateral based on the fact that Lehman's financial situation was worsening at that point during this whole time period. What is the blame that firms like that shoulder for this situation? What were they supposed to do? Were they supposed to not demand more collateral?
You're absolutely right. I mean, they have a fiduciary responsibility to their shareholders as well. And so if they have the ability to recoup any type of losses that could potentially happen because they see a sinking ship, it's going to be pretty hard to prove them, you know, pretty malicious in the situation. You know, one thing to look at, though, would be Ernst & Young as their independent auditors and the way that they use these mechanism. I mean, that's the point of an independent auditor, is to basically be independent of management, to double check to ensure that they are in line with the way that they're using certain accounting principles.
Right. If they're signing off on it, and same goes for Fuld or for Aaron Callan or for Ian Lowett or whoever else, Bart McDade and all these people, they're signing off on it. And there's Aaron Callan, who was the CFO at Lehman Brothers during much of the collapse. Then you've got some real issues. All right, Adam, thank you very much. We'll get more into this. Talking
about light volume, really, I would say over the last year or so, even when the market started to pick up from their March lows, the anniversary of which that we just passed, light volume has been an issue, and a lot of naysayers saying, nah, you know, don't get involved in this market until we see a really significant volume pickup. So is it a little bit of a cop-out as well? Or are people missing a movement in the market just because of this question about volume?
Yeah, sure. I mean, of course. I mean, there's a lot of money sitting on the sidelines. I mean, there's reports out there saying there's just tons and tons of money that's just sitting there trying to decipher subjectively. I mean, this market is so subjective right now because you have Greece, you have the healthcare reform, you have different fiscal issues, you have the Volcker room. I mean, think of all these different things and changes to policy. I mean, how is someone supposed to gauge the value and the fundamentals of the stock market?
Okay, so then how do you do it? How do you do it if it's a subjective market and it has been so for the last 12 months? Then how have you adjusted?
We have to. I mean, we basically have to. I mean, we become policy interpreters. We take in all our reports and we view and we look at all the things that could affect these issues. I mean, not in my career have I spent more time actually trying to read lips and read between the lines of the different policies and the different ways and the different transitions that this economy can take over the next few months.
What are you finding now? I mean, what would be the next kind of catalyst? Is it something out of D.C.? Is it one of these policy measures that they're considering now? What's the next big thing that you think is a potential mover one direction or another for just widespread financial markets?
Unemployment's the biggest thing, and I think that's what everybody's looking at. I mean, that is the 800-pound gorilla.
You think we're at a turning point there?
It starts to definitely trend. What's that?
You think we're at a turning point, as Larry Summers has talked about, that we're starting to just be at almost a job creation point?
I think we're at the point where, yeah, we could very well see that, Colin. I mean, I don't think it's going to be anything that's going to be extreme. That there's going to all of a sudden be some light bulb that goes off and says, "Wow, you know, we've turned the corner." I think there's going to be definitely some variance and some couple steps forward, you know, 1.5 steps back kind of issue. But I think moving forward, it's going to be looking pretty good on the unemployment side.
So if we're looking, as Connell was mentioning, for that next catalyst or tipping point in the market, what sector are you particularly focused on?
Sure. Well, CK Cooper as a whole, I mean, we focus a lot on healthcare, biotech, oil and gas, energy as a whole as well. And so, you know, those are the sectors that we typically favor and we have the most expertise in, and therefore, of course, I'm going to be a little bit more biased towards. But, you know, also the financials, selectively picking some of the financial stocks, I think is also a good place to look at because, as you can see, depending on what they do and the way that they, you know, we think that their balance sheets look like, they could be taking advantage of some really good gains here moving forward.
That's the issue. We think their balance sheets. All right, Adam. At least somebody's awake this morning. Thanks for hanging with us out there on the West Coast where it's in the middle of the night. Adam Connors in Irvine, California. Now, never good. Let's talk to Adam Connors again out at CK Cooper about this regulation deal. You surprised that Dodd's going it alone here, and you think it'll pass?
No, I don't think it's going to pass. I mean, I'm actually a little bit excited about this because the idea that the regulation and the things that are trying to be implemented or proposed in this situation, it's going to take a lot of fine-tuning and a lot of heads need to be collaborated around this because some of the things that they're talking about could be very detrimental to not only the near-term but the long-term stability.
Like what? So what do you mean you're excited about it? What does that mean you're excited about it? That you don't want to see
excited
like this kind of the Wall Street view of, oh great, these guys can't get it done, so we'll get to be running around like cowboys here and nobody watching us, or what?
No, not exactly cowboys. What I'm liking is that you know, Senator Dodd, the idea of him being able to pass something single-handedly, or at least on the collaboration just by his party alone, the odds are pretty slim, even if he is stating he's including a lot of the talks of when they were approaching it from a bipartisan standpoint. And so what I like about it, Colin, is that they're going to have to go back to the drawing board again, and it's going to take the due time and the due process to really think these things through and to really remove the politics of it and really focus on the underlying issues. That's what I'm excited about.
Earlier in the show, though, you mentioned that the uncertainty that clouds this market is really keeping out more volume in trading. So based on what you said earlier, wouldn't having an actual bill pass and getting this regulatory reform on its way add some certainty to the market and bring investors back in? And isn't that what we want to see when we're in a recovery like the one we're in?
You're absolutely right, Jenna, but I'd also point back to what I mentioned about unemployment being the big issue. This is just one of those ancillary things that I think affects only a small part. I mean, a lot of these are affecting the prop desks and the trading and things that really don't necessarily matter to the economy and the markets as a whole. Yes, I think, Jenna, that it would offer some clarity to some of the investors, especially the ones that are focused on the financial sector. But you know, this can have a huge way of handcuffing a lot of folks if it's pushed through.
Well, listen. Let's take what happened in 2008, for example, and maybe you don't agree with this, but a lot of people looked and say, it was a perfect storm. There were a lot of factors that caused the financial crisis, but there is an opinion out there that deregulation over a long period of time was one of those contributing factors. So if you're pushing this off, and you're saying it only affects a small sliver of you know, financial industry professionals, I mean, that was a pretty big portion of the economy, the entire economy, just about every person in the country that was affected by the crisis in 2008. So if we don't do this again, won't history, if we don't do something, won't history repeat itself?
Absolutely. I mean, you have a very good point, Connell. What we do need is that everybody's on heightened alert right now. So everybody's looking at any type of firm or any type of balance or anything that's going to be out of the norm. And so all the companies know that they're under a microscope for everything that they do. So we have a time now that we can actually analyze and take hopefully a third-party approach to the way that we're doing things and really be able to see, okay, this fits in with what caused some issues, this didn't fit in with the issues, so that we don't go overkill like a lot of folks say Sarbanes-Oxley was.
Well, let me just ask you real quick here. You said go third-party on this. We now know that Chris Dodd is moving moving ahead as a Democrat alone without a bipartisan support for this bill. We're seeing that also in healthcare reform. But do you really think that the markets need bipartisanship here?
Absolutely. I think they do. You know, the idea that we're going to become even more bipartisan here with the next election, you know, with them saying more Republicans are going to be coming on board, I mean, that's something that what we're seeing is I think a lot of folks are seeing through that politics are getting in the way with some of these issues, and the idea of being able to ram things through Congress,
right.
Not only is it being ineffective, but it could be kind of malicious if you really think about it. And so, you know, I know we're in a hectic time right now, but I'd hate to make hasty decisions on things, especially as important as you know, some of the bills that are being proposed.
All right, well, we'll keep talking about it. Nothing hasty here. I'm sure it'll be a big story next week as well, and we'll talk about it on the web show next hour with Adam Connors out at CK Cooper. But in the meantime, Americans